Hi guys, it's Kel once again. Today is 4th of May, Thursday, MAO with Kel once again. Now, USA CDS, credit default swap, kept climbing. Is that the reason why the GOAT, all right, the greatest of all time, all right, that's the acronym for that, is not buying? Now, a lot of people will be asking this question, how come that the bank shares are so cheap right now? Why is Warren Buffett not buying? This is something that have you thought about that? Let's talk into all this today. All right, this is a must-watch video. The content is incredible. Share, like, and forward to your friends. Let's go. All right, before that, once again, the disclaimer apply as usual, and thank you, AIMS, for the kind sponsorship. Okay, do you remember I said this yesterday? Now, yesterday during this MAO video, right, I show you the USA 1-year Euro CFDs, and I show you that the numbers is climbing. Now, just about 2 months ago, it was at 89. And then 1 month later, it's at 177. The whole thing jumped up by almost 100%. This is a very dangerous spot because why? The last time we saw this was Lehman Brothers, US debt downgrades, and the government shutdown. And those times, we were at about 89 level. This time now is 177. And of course, you can see that a lot of retailers are shoving money into cash, into the money market. So if the banks run out of money, think about this, the Federal Reserve can consider to put in more money. But if you base on what Federal Reserve, Jerome Powell said last night, this may not happen. That means that more companies, more banks may have to be bought over. But again, Jerome Powell says that he's not that comfortable. So it's a bit of a problem here. If it's not comfortable and then the banks are going down, are you telling me that they're going to be forced to bankruptcy? That's something that to watch out for. And the crazy part is this, you can see right now, right, that's why the smart money are not involved in the market, because they know probably the market is going to go down, while the dumb money or the retail money went into the market recently. As a matter of fact, right, the last few days before the market came off, the CTAs, the hedge fund, the mutual funds went heavily into the market, and they bought majority of the S&P between 4100 to 4200. So you can imagine right now, if the market pulls back to 4,000 or 3,900, what can happen to the market? This is unimaginable. So that's the reason why, I was telling you guys about this, about Charlie Munger saying that the next problem could be the commercial property loan. And I mentioned to you guys that most likely this could be a dead cat rebound on the S&P 500. And of course, this is where I posted, you can see that, beautiful, right? This is where I posted the call. And of course, the next 3 days, we can see the S&P 500 has toppled down. So all this is because we all understand how this thing works. And of course, including my indicator, that gave me the confirmation that the boys were selling. They were not buying at all. Pretty cool, right? All right. How about this? Did we make money? Of course we did. All right. So some of my students have sent me their winnings. They made about $1,700 per person across a few of them. And it all just basically followed the sell at 34,200. So they captured nearly 900 points from the market. This is absolutely amazing. All right. So on a side note, remember I talked about gold. Now, the thing is, about 3 weeks ago, I tell you that JP Morgan seemingly has a huge short position on gold. Now, this is not confirmed, but it's just a speculation because they were the one delivering the gold futures contract. So if someone's delivering it, most likely this person could be shorting the market. And because of that, right, you can see this morning gold shot up. In fact, this morning, gold shot up to 2071 right at the first half an hour of the day. Now, if you look at it carefully, right, our indicator has already given the buy signal 3 days ago. To go long on the day chart, right, we need the bar to be yellow color. We need the KSI to be green, signifying the boys are buying, and the KCX must be black. And when these three are all aligned, bang, that's how the gold shot up, okay? And of course, it's not difficult to understand this. If the market has been consolidating so much during these few days, then naturally all the stop will be done around this area, and that's why about 2056 level, right, that's where the stops all get triggered at the same time. So once again, guys, for those who actually followed us, you should know that we've been calling for buy on gold, and today was a good harvest day. Congratulations to all the buyers. All right. Of course, there's another reason for that. Seemingly, a total of 24 countries are ready to accept the BRIC currency. Now, this is really bad, because if they do that as well, right, that will really sideline the US dollar. And because of that, that's the reason why the US dollar slide, despite you have a rate hike last night. But the only thing is this, I'll share with you the next MAO, is that if that's the case as well, by right, the crude oil should be going higher. But the crude oil also slumped by 5%. So is it because there's a recession coming in? I'll tell you more tomorrow. All right. Now, the thing is this, let's recap what happened last night. The Dow Jones down by 270 points, the Nasdaq down by 83 points, and the S&P down by 28 points. Now, when I was looking at this, I was expecting the Google, Microsoft to be down a fair bit, right? Nope, they are all pretty flat. The only one that down significantly is actually the banks. The banks, like JP Morgan is down by 2%, Bank of America 1.1%, and we have Morgan Stanley down by 1.7%, or they are the ones that bring the index down. Now, one thing is that the Apple share. Now, Apple will be coming out their earnings after market. And of course, everybody is expecting the number to be a little bit lower than expected. But of course, many analysts have revised the number to a lower level. So they revised it so low that it's not going to be difficult. It's going to be too difficult to be better than expected. But of course, if you compare it to month, quarter to quarter, year to year, then this is where things happen. And of course, Apple very smart. They came in and said, you know what? We're going to buy $90 billion of our stock buyback. So again, you see, they know that they know the earnings will not be good. So in front, before things go crazy, they already tell you that they will do a share buyback. All right, so let's look at the market right now. The Dow closed more than 250 points lower than on Wednesday after the Federal Reserve rate hike for the 10th time. Now, I've said this many times since 2 months ago, there will be triple rate hike. Plus 25, 25, 25. I said this 3 months ago, and it's not manifesting, all right? The thing is this, Jerome Powell is very clear with his statement. I'll tell you more later on that he's looking at potentially one more rate hike, all right? But he didn't say pause at the moment, yeah? So what happened was that there was a early bullishness before when the news came out. But because after that, right, when Jerome Powell was actually questioned by the journalists, and that's where the selling started to come in, okay? To him, it's very clear. He don't see inflation to come down too quickly. As a matter of fact, he thinks that, right, the 2% target is still their target. And with the current rate at down 6%, to go down by 2%, seriously, you will need a real pullback in all the asset class. And more important things that there might be a more rate hike to really stimulate this. So the thing is right now with him very, very sure that he want to see only 2%, that means that, right, there shouldn't be any rate cut this year, in my opinion, yeah? All right, so of course, the traders also realized that this time around, they didn't feel Jerome Powell was too adamant on his rate hike, but definitely he said that, right, at the moment now, it will be all data-driven. He will watch the statements and all the data to make sure that he will come out in the next when doing mixed meeting, and what would they do? Now, from now till then, it's all right. It's about 1 month and a half to go. So it's still a long time to go. We need to see how the inflation results comes in. Yeah. So the thing is that now we do expect more credit tightening coming in, because if that is the case right now, with more interest rate coming in, the bank will have to adjust accordingly. They will know that the stress will hit the loaners. If they continue to lend out money, right, the loan may not get back. So a lot of banks have decided, you know what, rather than to be killed, they rather, stop their lending, and that is terrible. And that's the reason why you can see that the regional banking ETF KRE declined by 1% more, yeah? All right. So Apple, smart, very smart. They already tell the whole world that they expect to announce a $90 billion in buyback and dividend when the report's earning comes out. So the thing is this, Apple, we all know that have been buying almost $600 billion in stock. That's the reason why the Apple share is so strong, because think about this. Stock market is about demand and supply. And if let's say the company itself has absorbed quite a fair bit of the supply, the stock price can go down. So that's the reason why you can see why Warren Buffett preferred to put 40% of his entire stake on this Apple, because he probably understands the game plan. And Apple is a darling, so likelihood itself, right, this will continue for a while. So do expect that if the earnings come out to be not so good, right, there might be a bit of shakedown first, but because of this share buyback, the market may be pushed up again. I'll tell you more in detail where to look out for, but a very important thing is this, the numbers are not supposed to be good, because we all know that the last few months, right, the buying of this stuff, this luxury handphone, in my opinion, is a little bit now coming down. Yep. And of course, there's a lot of alternative. So one good reason why I think Apple earnings may not be good, and that's why they're preparing for the share buyback. So the technical outlook here, you can see on the Apple share right now. Let's take a look. Okay. Now you can see the Apple share have been doing a very beautiful, in my opinion, orchestrated uptrend. All right. This is beautiful, right? A is here, and this is B, and this is C, and this is D. I can be very sure the market will touch D later and rebound. Now the thing is this, the volume has been okay, pretty decent. The RSI also shows that the market is kind of bullish right now. So I'm not half surprised with the share buyback. We can see 171, right? We're not half surprised of that. Now, to me, it's all right. The maximum to see will be 176. I think for Apple, right, 176 is a very good level to take a sell position. All right, if you think that the market is going to hit the recession, then 176 will be a very good level to consider to do a sell position there. Okay, but of course, again, disclaimer apply as usual. Yeah, you have to know your risk and reward ratio. All right, so let's recap what Jerome Powell said last night. Now, the thing is this, we all know that he have hike rate 25 basis points, and he never said there will be a pause. As a matter of fact, right, he said a lot of things, we'll talk about this, but very interesting is that some people are saying that, right, the rate hike was unnecessary and it's harmful. Now, to me, it's right, most probably this guy is involved in the other side of the market, because we all know that now the inflation is still at 6%. If you still continue to do what you're doing right now, the inflation will erode all the profits. And the thing is this, the people, the livelihood itself will all be affected. That do not, the 6% itself is not including of food and energy prices. So you can imagine probably now it's at 9 to 10%. So let's look at what Jerome Powell said last night. Let me bring it to you right now. Okay, so Jerome Powell basically says that, right, said this, Powell says that the Fed is prepared to do more if warranted. And that was a statement that basically brought the market down after that, okay? And of course, he says that more rate hike is still possible. Really, this is very important. I realize that some of the mainstream media actually omitted this area here because Jerome Powell said himself, the Federal Reserve could continue hiking if economic data points the central bank in that direction, Jerome Powell said. All right, we are prepared to do more if greater monetary policy restraint is warranted. So it's very clear that there could be one more rate hike. But later on, I'll show you the Fed fund probability statistics, right? You will notice that the market actually stopped that. They don't expect another hike. That's interesting. And of course, there is no decision on a pause yet. Very clear. There is no decision. A decision on a pause was not made today. That means that the thing is this, the whole rate hike today, all the committee members, 19 of them, right, unanimously all voted for it. That means that no one actually say no. Think about this. That means that everybody know that they must rate hike. And that's something that everybody was pretty stunned, because some of the officials were saying that they're looking at maybe have a pause, but still probably change their mind when they're on the table. All right. So the thing is this right now, right? All we can say is the process of tackling inflation has further to go, right? So it's very clear that Jerome Powell knows that the current inflation now is still way, way, way above their long run goal of 2%. So in short, there should be another rate hike. And of course, he mentioned that JP Morgan acquisition of the First Republic was an exception, and he don't think that this is a good thing. In fact, he feel that we should really stop doing this, right? It's in a way, directly, indirectly, yeah? All right, anyway, this is more to go, but enough said, right? The very key point is this, Jerome Powell believe that the current labor market now is still strong, so there's a lot of room for them to do what they need to do to bring down inflation, and it's too soon to cut rates. So all these are very important information. You can read on your own, but I'm not sharing with you that, right, Jerome Powell is very clear. So if you're telling me now follow the Federal Reserve, don't fight the Fed, then the answer is you shouldn't be buying. All right, isn't that make sense here? All right, so when's the next meeting, right? The next meeting is in 41 days from today. That is in about probably, I think 10 to 15 of June, all right, roughly there. So what do you expect from now to then? Well, if the inflation numbers still continue kicking higher, then I think the next rate hike is almost a confirmation, right? But the thing is this, if you look at this Fed fund rate probabilities, this from the Fed fund, from the Federal Reserve itself, right? Now take a look, the current number is 500 to 525 current level. And that's why they are saying that in 14th of June, which is on now I got a date, okay, 14th of June, right? They don't expect a rate hike. Interesting. You see, here itself put there 14th of June, but the current level now is 500 to 525, and 88.6% says that they expect the rate to pause. Interesting. This is where the traders think so, yeah? But Jerome Powell says that a rate hike is possible. So unless these people know that from now till then, the inflation will come down by itself. If not, I cannot see why there is such a, the numbers like that. Very interesting. In fact itself, right, I purposely went through one more, the next meeting on 26th of July. Interestingly itself, right, they actually expect a rate cut by then. So the Wall Street traders are all looking at a rate cut this year. But the Federal Reserve, Jerome Powell himself said that there will be no rate cut. So don't you find that it's very interesting that they have two different views right now? That is where I say there's a lot of ambiguity here. We should see more before we can react, yeah? Now, I want to talk about this. Now, last week, right, the bank shares was already very low prices, and everybody was telling me that, Cal, you know what, let's buy some bank shares. Now, the thing is this, just 2 months ago, the bank share, the SPDR S&P Regional Banking ETF was trading about 64, right? 64, yeah, that was at just 2 months ago. Today, it's at 38. Oh my goodness, it's like down by almost 50%. So if the thing is this, if things are so cheap 2 weeks ago, and now 2 weeks later it's even cheaper, right? Why the Oracle, right? Warren Buffett is not buying. This is where it gets very, very intriguing, all right? So the thing is this, I want to share with you right now. Let me just give you a moment. I think there's some PowerPoint issue here. Give me a short while. Here we go. All right. This guy, Jim Bianco, all right, he says this, Warren Buffett is the GOAT, right? The greatest of all time, largely because he has invested in banks for over 50 years. No one understands them better, right? Okay, the thing is this, I have noted his absence is all happening in the regional banks in the last 2 months. He's not investing, and to me, it speaks volume. And Charlie Munger may have something to say. Now, this do take note. This is an April 30th posting by Bianco, and it makes sense. If let's say Warren Buffett, he invested in all the bank share the last 50 years, why recently now the shares is so good and cheap, he's not buying, right? So this is 30th April, right? Remember that? And you can see what happened recently. The last few days, that means, right, between 2nd to 3rd of May, you can see now Charlie Munger come out and says that, look, the banks has full of bad loans on commercial properties, and most likely they're in trouble. And this is very, very clear from Charlie Munger. So if you look at it right now, the Oracle, right, of Omaha, right, says that he didn't do anything. And his sidekick now, with Charlie Munger, a very smart lawyer, businessman, says that, you know what, we have a problem here as well. So what do you think will happen to the bank share? So in fact, I tried to Google on this Warren Buffett, and I realized that he did not talk about the banks at all. In fact, he only said that he'll keep on buying Occidental Petroleum. This is pretty cool. I'll talk about this tomorrow. All right, so all these things tells me that something is very wrong. So let's look at the price. So this is the S&P 500 forward 12-month PE ratio, and you can see that, well, the PE ratio is still considerable high. Now, this is now at 17, right? So what is a good time, right? It's something about 15. Look at it. When you hit 15, this will be the best time to buy into the S&P 500 stocks. So where are we right now? We're at 17. So to hit 15, we probably need another 15 to 20% drop, right? Because that's a mess here. So another 15% drop will be bringing the S&P down probably to about, that now is 4,000. So you got 3,300 area, something like that, okay? So let's see whether this will happen. But of course, I'm just giving you my personal opinion because I can't see the reason to buy. And if the Oracle is not buying, I can't see why are we buying. All right. Now, this is where it gets very serious. Okay, this is something that I want to bring to your attention right now. Now, this is the US 5-year CDS, credit default swap. And you can see right now, right, at the start of 2022, it was trading at less than $10. And in 2023, this has amounted to $20. And now it's at $63. Now, what does it mean? All right, let me explain this to you in a short moment, yeah? But you can see right now, right, the last time we see 63 and higher was back in this 2008. That was during the 08-09 crisis. That was where the CDS went all the way up. So now, do you see that it's actually doing the same thing right now? It's exactly the same. So what is CDS, by the way? So basically, in short, is simply put that it will cost you $63 to insure $10,000 of the treasury bonds against a risk of default. Now think about this, for a treasury to default itself, right? It's possible if the country is like, you know, those countries that you cannot be trusted. But if you think about USA, right, the country that can print money, how can you tell me that you don't believe in me? With all the money and the power and the weaponry, how can you don't trust me? Well, apparently it's happening. So now the thing is this, people are betting that, right, maybe the US may default. That's why the CDS has shot up to 63. Now, this is not the end yet. Watch this, guys. This is the CDS 1 year. Oh my goodness. Look at it right now. The last time when the 1 year hits the high, it was at 67, and that was during the Lehman Brothers time. Now, my friends, it's at 149. Oh my goodness. We're talking about what? How many times? It's more than 100%. This is really, very scary. Now, I'm not trying to say that the market will crash, but I'm very clear that something's wrong in the whole entire system. And for Jerome Powell to say that the US banking is fine, I really, really feel that he probably got his own thing that he can't say, but the numbers are showing it. Of course, if things goes well, the CDS may come back down again. But the question is this: if it's all is good, why are these professionals playing this game right now? They must have known something that we don't, right? It's the same thing right now back in 08, 09 when Michael Burry was going around doing his TDS deal. Everyone was laughing at him, and then what happened? So I'm not saying that this will have a repeat of what happened, but I'm just feeling that the numbers is back again to really ridiculous level, and people are not talking about it. That is where it gets scary. So now let me show you the S&P 500. This is S&P 500 using the Fibonacci itself, and you can see that it's really incredible that, you know, where the base is, where it stops every time. This is insane. So now the thing is this: we can see that now it's actually stopping at the 3,800 level. To be precise itself, right, it's 3,814. Now this is a real precise number. Now, if you ask me, the S&P 5 now trading at 4,090 now, I believe that in the long term, in probably a 2 to 3 weeks time, we will get to see 3,814 for the S&P 500. Of course, if the market really want to push up and deny all the short sellers like myself, then it will have to go back to 4,198 because that is where it actually technically came from. Now, the thing is this: if the market breaks the 200-day MA, if you look back at the chart, it's almost certain that every time when the market breaks a 200-day moving average, the market will come down to 3,814. So that will be my first target for you guys. And anything crazier than that, oh my goodness, the market can go down all the way back to 3,504. That is what happened back in October low. That's a Fibonacci level, 50%. Now, if I go a bit more crazy than you can imagine, the next number it can go is 3,194. That is below the 3,200 level. Now, honestly, that is my ultimate level. If that price really get traded, I can tell you this: I will buy S&P and just keep it and see what happens later on. I'll buy US stocks, keep it and leave it on. I am pretty sure that not immediately we'll see profit, but we will see profit very soon, okay? If the S&P ever go down to 3,194, all right? So that is all the great information that I think you need to have for today. I'm pretty sure you enjoy this session. This is Kel signing off. I'll see you on the technical side. Bye-bye.